In the modern financial lexicon, the term growth stock has become synonymous with hype, high valuations, and the promise of rapid, often speculative expansion. It is a label frequently attached to new companies in fashionable industries, where the narrative of future potential often outweighs any present-day earnings or tangible value. Traders and investors, driven by a fear of missing out, chase these stories, buying into excitement and momentum. This contemporary approach, however, stands in stark contrast to the methodical and scientific definition of a growth stock, as understood by William Delbert Gann. For him, growth was not an abstract story or a fleeting market sentiment. It was a concrete, identifiable, and predictable phase in the life cycle of a stock or an entire industry. This phase was not driven by hype, but by one of two powerful and fundamental forces: groundbreaking innovation or the completion of a great market cycle. This is a guide to that lost definition. We will explore how William Delbert Gann identified the true engines of market growth, a method based not on chasing narratives, but on a deep understanding of economic progress and the immutable laws of accumulation and distribution. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. The first and most powerful driver of true sustainable growth, according to the philosophy of William Delbert Gann, is innovation. He was a profound student of history, and his research taught him that the greatest economic expansions and the most legendary bull markets were not born from financial engineering, but from tangible, world-changing new discoveries and inventions. He understood that human progress is the ultimate engine of wealth creation. When a new technology emerges that fundamentally alters the way people live, work, or travel, it does not just create a single successful company. It gives birth to entire new industries, sets off a chain reaction of economic activity, and anoints a new generation of market leaders. The professional speculator, he taught, must be a forward-looking historian, capable of recognizing these great paradigm shifts at their inception. In his writings, he traced this progression with clarity. He noted how the invention of the steam engine and the expansion of the railroads revolutionized transportation and opened up the continent, creating immense fortunes and making railroad stocks the undisputed market leaders for a generation. But leadership, he knew, was never permanent. He wrote, "The Bible tells us that old things pass away and new ones come to take their places." The canal boats and stagecoaches passed away to give way to the railroad, a more rapid mode of transportation. The wise trader, therefore, does not remain wedded to the leaders of the past. He must have the foresight to see what is coming next. As the age of the railroad matured, the invention of the automobile created another wave of prosperity, giving rise to a new class of leaders in the motor and oil industries. The trader who recognized this changing of the guard, who let the railroad stocks alone and focused on the emerging motor companies, was positioned to capture the next great wave of growth. Following this, the invention of the airplane by the Wright brothers initiated yet another revolution in transportation, which William Delbert Gann saw as a force with unlimited possibilities that would help to revolutionize business and bring on another wave of prosperity. And, writing in the mid-20th century, at the very dawn of the atomic age, he was already looking to the next frontier. He instructed his students to study the companies involved in uranium and atomic energy, recognizing that this new power source held the key to the future and would undoubtedly create the market leaders of the next generation. This is the first definition of a true growth stock, according to William Delbert Gann. It is a company that is at the forefront of a major technological or economic innovation. The method for identifying these stocks is not to chase rumors or high momentum, but to engage in a process of diligent, forward-looking research. The trader must first identify the new invention or discovery that has the potential to reshape the economy. He must then study the companies within that new industry, analyzing their prospects and their management. Finally, he must turn to his charts, applying his mechanical rules to identify which of these companies is showing the greatest relative strength and is emerging as the true leader of the new group. This is a scientific, business-like approach to investing in the future, a method of positioning oneself not in the fads of the moment, but in the great inexorable currents of human progress. The second type of growth stock, as defined by the methodology of William Delbert Gann, is born not from a new invention, but from the great and powerful cycles of the market itself. He understood that even a company in an old established industry could be reborn into a phase of dynamic growth after it had passed through a long and complete cycle of distribution, decline, and, most importantly, accumulation. This is the cyclical growth stock. Its potential comes not from a new technology, but from a fundamental shift in its ownership structure. The methodical transfer of its shares from weak, discouraged public hands into the strong, patient hands of informed interests. William Delbert Gann taught that before any stock can begin a great and sustained advance, a long period of preparation is required. He used the analogy of constructing a building. The larger the building, the more time required to construct the foundation. It is the same with stocks. The greater the advance or the decline, the more time required in preparing for it. After a major bear market, a stock that has been thoroughly distributed at high prices will decline to a low level and enter a prolonged state of neglect. It becomes a dead stock, trading in a narrow, lifeless range for months or even years. The public, who may have bought it with great excitement at the top, becomes completely discouraged and finally sells out at a great loss. This period of dullness and low volume is precisely when the foundation for the next bull market is being laid. The insiders use this period of public apathy to quietly and methodically reaccumulate the very shares they sold at the top. A stock in this phase does not appear to be a growth stock by any modern definition. Its earnings may be poor, the news surrounding it may be negative or non-existent, and its price action is boring. Yet it is in this very state that it possesses the greatest potential for future growth. The long period of accumulation is like coiling a spring. As more and more of the floating supply of the stock is absorbed by strong hands, the potential for a powerful upward move increases exponentially. With no significant overhead supply left to impede an advance, even a small increase in demand can initiate a sharp and sustained rally. A stock, therefore, can transition from a dead or value stock into a true growth stock at the precise moment it completes this long preparatory phase and breaks out of its accumulation zone. This is the second type of growth that William Delbert Gann taught his students to look for. It is not the growth of a new invention, but the cyclical growth that is an inherent part of the market's life cycle. The key to identifying these opportunities is patience and the ability to read the signs of a completed accumulation on a long-term chart. The trader must have the discipline to watch a stock while it is dull and unpopular, knowing that this is the phase of preparation, and the knowledge to act decisively when it finally gives the signal that the foundation has been laid and the new markup phase is ready to begin. Having established the two distinct definitions of a growth stock according to the philosophy of William Delbert Gann, one born from innovation and the other from market cycles, we will now dedicate our focus to the first and most powerful type, the leaders of new industries. These are the companies that are not just participating in the economy, but are actively reshaping it. William Delbert Gann understood that the greatest and most sustained bull markets are driven by progress, by new discoveries and inventions that capture the public's imagination and create entirely new ecosystems of wealth. Identifying these opportunities at their inception is the highest form of professional speculation. This requires a specific four-step method that moves from broad economic observation to precise chart-based selection. This is the practical guide to finding the stocks of the future. Step 1. Identify the new industry. The first step in this process has nothing to do with a stock ticker or a price chart. It begins with a deep and forward-looking study of the world itself. The trader must become a student of science, technology, and economic change, always asking the question, what new invention or discovery will revolutionize business? William Delbert Gann taught that following each depression, Some new discovery or some new invention has stimulated business and progress and brought on another boom. His analysis was rooted in this historical reality. He saw how the steam engine gave way to the railroad, how the automobile created the oil and rubber industries, and how the airplane was set to shrink the world. The task of the professional speculator, therefore, is to identify the next great engine of progress. In his own time, writing in the 1950s, he pointed directly to atomic power, stating that it holds the key to the future for cheap power and undreamed possibilities for this new discovery. He recognized that this new energy source would revolutionize manufacturing in many lines and help to bring about increased prosperity. The modern trader must apply the same logic. He must look beyond the current market favorites and identify the emerging technologies of his own era, be it artificial intelligence, biotechnology, space exploration, or some other field that possess the same world-changing potential. This is the foundational step. You must first identify the new fertile ground where the next generation of market leaders will grow. Step 2. Make a careful study. Once a revolutionary new industry has been identified, the next step is to conduct a thorough and disciplined investigation of the companies within that sector. This is not a time for hasty decisions. William Delbert Gann was not a gambler who bet on stories. He was a scientist who acted on facts. He instructed his students to make careful study of their prospects. This involves moving beyond the hype and performing due diligence. The trader must research the individual companies, seeking to understand their specific role in the new industry, the strength of their management, their financial position, and their potential for future earnings. Which companies hold the key patents? Which have the strongest leadership? Which are best positioned to capture the largest market share? This is the fundamental work that separates professional speculation from blind gambling. You must understand the business you are investing in. Step 3. Make up charts. Only after the fundamental research is complete does the technical analysis begin. William Delbert Gann taught that a trader must make up charts and study the companies in the new industry. This is a critical, mechanical step. For each of the most promising companies identified in Step 2, you must create long-term monthly and weekly high-low charts. These charts provide the big picture, revealing the stock's historical behavior and its major zones of support and resistance. He also stressed the importance of charting the group average. He wrote, "If they are part of a group that you can get a record of, study this group." The action of the group average tells you if the new industry as a whole is gaining favor with informed interests. A rising group average confirms that institutional capital is flowing into the sector, validating your initial thesis that this is a new center of growth. Step 4. Pick the leader. The final step is the selection. Your research has identified a revolutionary industry. Your fundamental study has narrowed the field to a handful of promising companies. Your charts have given you a visual record of their market action. Now you must choose the one that will lead the advance. The rule, as stated by William Delbert Gann, is to pick the individual stock to buy that shows indication of leading the group. This is accomplished through a direct application of his principle of relative strength. By comparing the charts of the individual stocks to the chart of the group average, the leader will reveal itself. Which stock held up the best during the last market decline? Which was the first to rally when the market turned? Which stock is the first to make a new high, breaking out above old resistance levels while its peers are still lagging? The stock that answers these questions positively is the leader. It is demonstrating, through its own price action, that it is the subject of the most aggressive and intelligent accumulation. This is the stock to buy. This four-step process, from identifying a macroeconomic shift to the precise selection of a single leading stock, is the complete Gann method for finding and profiting from the first and most powerful type of growth stock. To see this method in practice, we need only look at the specific example William Delbert Gann provided in his course. speculation a profitable profession. Applying his own rules in the early 1950s, he identified atomic energy and uranium as the new industries of the future. He then followed his own method, conducting a careful study and identifying a list of companies that were positioned to lead this new technological revolution. He wrote, "Among this group of stocks are Babcock and Wilcox Company, Bendix Aviation Corporation, Dow Chemical Company, DuPont, General Dynamics Corporation, General Electric, Newport News Shipbuilding, Phillips Petroleum, Sylvania Electric Products, Inc., Union Carbide and Carbon Corp. Vanadium Corp. Of America and Westinghouse Electric Corporation." This was his meticulously researched list of candidates. He then proceeded to the final step, picking the leaders. He highlighted a few that he considered the very best of these stocks for the future, specifically mentioning vanadium, molybdenum, and General Dynamics Corporation. His selection of Vanadium Corporation of America is a particularly brilliant example of his methodology. He recognized that as a primary producer of uranium, vanadium was a direct play on the raw material of the atomic age. His chart analysis would have shown him that after a long period of consolidation, vanadium was beginning to demonstrate immense relative strength, breaking out to new highs and showing all the chart signatures of a true market leader. A trader who followed this analysis, who identified the new industry and then selected the leader based on the definite indications of the charts, would have been positioned to capture one of the great growth stories of that decade. This is not hindsight. It is the direct, practical application of a timeless and scientific method for identifying the true engines of market growth. While the search for the leaders of new innovative industries is a powerful path to wealth, it is not the only one. William Delbert Gann taught that growth is not exclusively the domain of the new. It is also an inherent cyclical phase in the life of established companies. He understood that a stock, much like a forest after a great fire, can experience a period of profound rebirth and vigorous new growth after it has been through a long and cleansing bear market. This is the second type of true growth stock, the cyclical leader. Its potential comes not from a new invention, but from the completion of a great market cycle. This is the story of how a dead stock, forgotten by the public and left for worthless, can be quietly accumulated by informed interests and transformed through the inexorable laws of supply and demand into the next great market leader. To understand this process is to understand the deep cyclical heart of the market itself. The journey from a dead stock to a growth stock is a study in patience and preparation. William Delbert Gann repeatedly used the analogy of constructing a great building. He wrote, "The greater the advance or the decline, the more time required in preparing for it." After a company has enjoyed a period of popularity and its stock has been widely distributed to the public at high prices, a long and often painful decline follows. At the bottom of this decline, the stock enters a prolonged period of public neglect. It is no longer a market favorite. The news surrounding it is poor, its earnings may have declined, and the traders who once chased it with excitement now view it with disgust. It becomes a laggard, a cat or dog, trading in a narrow, lifeless range for months, and often for years. This period of dormancy is, to the amateur, a clear sign to stay away. But to the professional analyst following the methods of William Delbert Gann, this is the most interesting and important phase of all. This is the period of accumulation. The same informed operators who sold the stock to the public at the top are now using the public's despair and disinterest as an opportunity to quietly buy it all back at a fraction of its former price. They absorb the steady trickle of selling from discouraged, impatient holders. The longer the stock remains in this narrow range, the more of its floating supply is being transferred from weak, emotional hands into the strong, patient hands of the professionals. A great cause is being built. The foundation for the next great bull market in that stock is being laid, brick by brick, in the quiet solitude of the market bottom. A stock in this phase possesses the greatest potential for future growth precisely because it is so thoroughly unloved. The selling pressure has been completely exhausted. The slightest return of genuine demand will have a disproportionately large effect on the price, as there is no significant overhead supply to stop in advance. The stock transitions into a growth stock at the precise moment it gives a definite mechanical signal that this long period of accumulation is complete. This signal is almost always the same. The stock generates enough buying power to break out above the major resistance levels that have capped it for years. At that moment, it is reborn. It is no longer a laggard, it is a new leader, powered by a decade of accumulated energy, ready to begin its next great markup phase. To illustrate this entire cycle with perfect clarity, there is no better case study than the one William Delbert Gann himself provided in his masterpiece, Truth of the Stock Tape. It is the story of Corn Products Refining Company. This single detailed example encapsulates the entire philosophy of cyclical growth. The story begins in 1906. Corn Products was a leading industrial stock of its time, and in the great bull market of that year it reached a major high of $28 per share. Following that peak, it entered a severe bear market, collapsing to a low of just $8 in the panic of 1907. This marked the beginning of its long period of dormancy. For the next 10 years, Corn Products was a dead stock. It was a profound disappointment to anyone who held it. It briefly rallied to $26 in 1909, failing to surpass its old high. It then fell back to $10 in 1911 and back to $8 in 1913. For a full decade, from 1907 to the beginning of 1909-1917, the stock remained trapped in a vast trading range, spending most of its time between $8 and $20. This 10-year period was a masterclass in accumulation. To the public, the stock was a laggard, a forgotten relic of a previous bull market. But the professional analyst, studying his long-term charts, would have seen the signs. He would have seen the stock consistently finding support at the $8 level. He would have seen the supply of stock being methodically absorbed by strong hands, who were willing to wait patiently for years, knowing that a great cause was being built. As William Delbert Gann wrote, the stock, being in new territory and higher than it had sold for 10 years, showed that accumulation had been completed and that a big advance was likely. The definite signal, the moment the stock was reborn into a growth leader, came in 1917. After 10 years of preparation, the buying power finally became great enough to push the price above the major high of $28 that had been set back in 1906. This was the breakout. It was the signal that the decade-long period of accumulation was complete and that the path of least resistance was now decisively upward. The stock had absorbed all the selling pressure that had been created over a 10-year period and was now entering a new bull market of its own. What followed was a textbook example of the explosive power that is unleashed after a long accumulation. From its breakout point above $28, Corn Products began a relentless advance. It surged to $37 in 1917. After a period of consolidation, it then began its great primary move. By the spring of 1920, it had reached a high of $105 per share. After a normal cyclical correction during the 1921 bear market, where it found support at $59 far above its old breakout level, it resumed its advance with even greater force. In the week of October 21, 1922, Corn Products reached a final high of $134 per share. From its accumulation-era lows around $8, the stock had advanced by more than 1,500%. It had transformed from a forgotten low-priced laggard into one of the great growth stories of its time, not because of a new invention, but because it had completed its great and powerful market cycle. To apply these strategic rules with a master's precision, you must learn to read beyond the chart and grasp the dynamics behind every movement. William Delbert Gann's Truth of the Stock Tape is the foundational guide for this skill. It's not a book of theory, it's a practical course that teaches you to understand the real-time contest between buyers and sellers, recognize the critical phases of accumulation and distribution, and assess a trend's true strength. This edition is a faithful reproduction of the 1923 original. We decided to include the historical charts from that 100-year-old publication. While many are nearly unreadable, we felt it was important to include them for historical context. The true, timeless value, however, lies in Gann's text. For any serious student ready to understand the market's real intent, this book is an essential resource. Get your copy via the link in this video's description. The term growth stock has been diluted over time, but its real definition, according to the scientific methods of William Delbert Gann, remains as powerful and as profitable as ever. He taught that true, sustainable growth is not found in speculative narratives or fleeting market fads, but is the result of one of two powerful identifiable forces. The first is the force of innovation, the emergence of new industries, new discoveries, and new inventions that fundamentally reshape the economic landscape and create the great market leaders of the future. The second is the force of cycles, the rebirth of established companies that have passed through a great multi-year cycle of distribution, decline, and, most critically, a long and complete period of accumulation by informed interests. The search for these opportunities is not a game of guesswork. It is a scientific method. It requires the forward-looking perspective to identify the engines of future progress. It demands the patience to watch a stock for years while it builds its foundation. And it requires the knowledge to read the definite mechanical signals on the charts that confirm when the period of preparation is over and the great markup phase is ready to begin. This is the professional's approach. It is a methodology that rejects hype in favor of evidence and emotion in favor of rules. It is the path to identifying the true engines of market growth and, in doing so, transforming speculation into a consistently profitable profession.